Defiance recently launched another ETF, USOY. Is it a good investment? Let's find out. This video is not financial advice, nor is it a recommendation. Please do your own due diligence before investing into anything. USOY appears to be Defiance's answer to the well-known ETN USOI. It trades options against USO, the ETF that tracks the spot price of crude oil. When you invest cash into USOY, they use that cash to buy US Treasury bonds along with shares in FGXXX, a mutual fund that also owns cash in governments, which is just another way to say treasuries. Those treasuries bring in their own income as interest payments. As they earn interest, USOY will use them as leverage to sell puts against USO. According to their prospectus, USOY has the flexibility to sell either at the money or up to 5% in the money puts. Expirations are usually less than a week, but the prospectus says they can go out as far as 1 month. The premiums from these contracts are how they pay the monthly dividends for this ETF. USOY is an actively managed ETF and thus has a relatively high expense ratio of 0.99%. Let's take a look at the underlying ETF to get a better understanding of USOY. USO, the underlying fund, attempts to track the spot price of crude oil. It does this by trading oil futures, swap agreements, and other oil-related investments. Now that we've covered the basics for each ETF, here's some of my thoughts. USOY is basically just a covered put ETF that trades against a futures ETF. While that usually makes the underlying ETF look better than the option ETF, in this case there aren't any ways to directly hold crude oil in the same way you can directly hold Bitcoin or physical gold and silver. While holding shares of USOY or USO does not equate to investing in crude oil directly, you do get a type of exposure to the movement in its price. So if you're a dividend investor and want the most direct exposure to the price action of crude oil you can get, this might be an ETF to watch, since USO does not pay dividends. Holding ETFs like USOY, USO, or even USOI have higher risks than just buying stocks like Exxon, Chevron, or ConocoPhillips, since you're not only relying on the change in the price of oil to go in your favor, but you're also relying on the fund managers and traders to do their jobs correctly every single trade. There could be times when oil moves up sharply, but a trader drops the ball. There might also be issues that prevent the fund from trading that have nothing to do with oil itself. One example that comes to mind is the recent Microsoft update issue that grounded flights and affected banks. Because USOY is an ETF with active traders trading against another ETF with active traders trading against crude oil, this risk is more pronounced than simply investing one layer of traders deep. What do you think? Is USOY a good investment? Are you buying shares? Let us know in the comments below. If you like this video, you might also enjoy this one here on the screen. Subscribe to join the Cash Flow Club and hit the bell for notifications so you don't miss a single video.